welcome to the Ultimate Bull Run, where we bring 100 bulls, 100 stories in this one legendary run. And today we have a special guest who has made an extraordinary transition from an architect to a trader. He is well known for his short selling strategies and mental toughness. He has turned countless challenges into success. So get ready to dive into the journey of a true market master. Join me in welcoming one and only David Capablanca. Welcome to the show. Welcome to the Ultimate Bull Run.
Yeah, thanks for having me, man. I'm looking forward to it.
Awesome. It is an honor to have you really in our show. So David, let's start with the very beginning, right? The very beginning of your journey. From an architect to a successful trader is really remarkable. What first kind of inspired you to get into trading, and what was your initial approach when you started out?
Okay, so what got me into trading? So just I was looking for changing careers because I was stuck in a lot of student loan debt. So I graduated with my master's degree, and I worked for about less than a year in the real world, and I was getting working towards my license, architect's license, and that takes another 3 years. So what people they don't understand when they're getting into a career path like architects or like medical or a doctor or like a lawyer is that it just takes so long, and then you got to get licenses and stuff afterwards. So I was in school for about 10 years getting a bachelor's and a master's. You can't do architecture without a master's. And then you got to get licensed after like 3,000 hours. So I was stuck in student loan debt. So those all that schooling took a lot of years of to complete, and I took out a lot of student loans. So in the US there's a lot of student loans for expensive degrees. They cost a lot of money. I had over let's say multiple six figures of student loans. So it's a lot of student loans. And also when I first started graduate school, I actually was diagnosed with a brain tumor. So I had to have a brain operation, emergency brain operation, and that delayed my school with 2 years. So add 2 years on top of that. So that's why it was an extraordinary amount. And I was out of state. So in the US, I'm originally from Florida, from Miami, Florida. And if I would have stayed in Florida, the state school there is a lot less expensive. But I chose because I wanted to study under the best architects. And I still love architecture. But I chose to go, and I got accepted to UCLA at the time. UCLA was a top architecture school. I think it's still pretty good. It's still top. And a lot of my favorite architects were teaching there. So I decided to go all the way to California, another state, which is like 3 times more expensive than the state school. So that's why it was so high, because people sometimes are like, wow, why did you get in so much student loan debt? How is that possible? And it's like, it's because of that. So the brain operation delayed my schooling. It was out of state. It was a long degree. And, I was also, unfortunately, a lot of students, even though they get into professional degrees, we're not taught like finance in school. We're just taught to pursue our passion, pursue our, what we're good at. I was good at architecture, so I just went with it. Good at puzzles, good at pattern recognition. It just applies to trading too. And just, good at being creative and using my imagination, and also math and science. So it's like a lot of that actually transitioned well towards trading. But yeah, when I was stuck in all that student loan debt, when I graduated, they give you like 6-month grace period with before the payments start becoming due. And then once I got the payments started becoming due, I was like, man, I'm gonna be in. It was a realization, and it's just it's just like when it hits you, it's reality hits you like that. It's like, all right, my passions, my dreams, they're never gonna become a reality unless I gotta, this is not gonna work. So the architecture route of just working 9 to 5 and just being in debt my whole life. So it was a realization, and it was like, all right, I need to find a high income skill. That's what it came down to. And I first looked into real estate. I signed up for a real estate course, Keller Williams course for like $100. And as I signed up, it was only $100. So as I was looking into that, I wasn't really passionate towards the real estate. I knew it had to relate with architecture, but it was more like sales and like going into and studying all this material to get licensed. So as I was starting that because I had nothing else to do, I had no nothing. I couldn't think of anything else that was high income. I was exploring online and YouTube and stuff, and like stocks came into my world, my vicinity, and I started to look into it, and I was like, you know what? Let me see if this is real. And I looked into it enough, and I was like, okay, if I just it dawned on me. It's like, man, a lot of people fail at this, but if I treat it real, like if I treat it like I did with architecture, like college, I go to school for many years, and then for a few years, and treat it serious, and devote myself to it, um, it could work. It's a high chance it could work. And I knew myself. I was like, I'm not a Lambo kind of guy. I'm not like getting rich quick kind of guy. So I'd never been like that. So, and I knew like with architecture, if it took me like 10 years to get the masters and all that, and then the real world to get licensed, and to get like a salary and be in debt and all that, and just live that life, then like why would I expect to? Or so like I wasn't coming in with like, okay, I got to be profitable in 3 months, 6 months. It didn't make any sense, because like it took, it's like to treat something serious, like the mastering a craft like architecture took a long time. So I was like, okay, so I'm not gonna expect to make money. I'm just gonna study and know that and learn information, because I knew absolutely nothing. I was financially illiterate. I didn't even know what stocks was. I didn't know what the ticker symbol was. I thought they spelled the ticker, the letters. I thought they jumbled it like it was it didn't make any sense. I didn't understand what anything was. The charts looked to me like architecture drawings with AutoCAD, like different lines. I didn't understand what I was doing. So like I just came in with like a blank slate and just learned from the ground up, and just devoted a lot of time. And as I was doing that, I understood there's like a lot of personal growth involved to get good at trading. So I knew I had to like start paying down debt. I had to pay off my credit cards. I had to like get my living situation better. I had to get my everything under control, my life better, because it's not, I knew right away, like, because of the material I was looking at, that it's not like, you can't go to trading to expect to fix your life problems, like to make money from trading, to fix your financial problems or your personal problems, like proving people wrong, or, it's like you're out there to, to be the man, or, so like, or like, just so you can't come in with that. You got to come in with like very clear minded, little stress outside, because the market, it's very what do you call it, unpredictable. So and very, you can't control what the market does. But like, so out like your life before coming into the market, if it's calm, it helps a lot with trading. So it's like I was working on all that stuff. But yeah, just that's how I got in trading, man. Yeah.
That is really inspiring and a humble beginning. And we're really sorry to hear the early challenges, the health challenges that you faced. A lot of people accept that as a fate, and they don't push them forward. But starting from that, and then spending, like you said, 10 years into a master's that does not pay much, and you that only puts you in a debt, right? Is and kind of escaping that, like having that kind of debt and then escaping that, is where a lot of people kind of struggle. And I really liked when you said there are very few people who really understand the trading. A lot of people get into to get quick money, to get out of the debt. Yes, it is the end goal, but I really like the humble beginning that you had. There was no expectation when you started out. You wanted to learn it, you wanted to give your time, you wanted to put an effort in it, and then you saw the result. That is really that is really inspiring. David, that was like when you started out, those are the hurdles, right? Can you share some of like the toughest challenges that you encountered, like during the trading arena, that impacted the initial progress?
Yeah, so it's the early losses hurt the most, especially. So I started with basically no money, so I took a lot of odd jobs to start like margin accounts, like a $2,000 margin account, so I can short sell. So I knew right away I wanted to short sell, because I saw a lot of pump and dump patterns that made a lot of sense to me. And the stories behind the pump and dumps is like someone that's manipulating the stock that has shares to dump. So the company's basically nothing there. It's all just like it's all fake, you know. It's just all it's on the market just to collect money, the stock. So like that made a lot of sense to me. But like I knew that's what I wanted to do and focus on. So just picking one thing and sticking with it and having the vision of like, okay, this strategy is gonna be here for 10 years, 5, 10 years, 20 years, and I can just I just keep learning, you know. So like it's not you just master it. But one of the early challenges, I would say it was, well, first you have the setbacks, and then it's like, you know, you have you tell yourself I'm gonna have $100 stop loss, and the $100 stop loss turns into like $500. And you like, why did I do that? Why I knew I shouldn't have done that, because I remember telling myself, for example, I worked as a tutor, a private tutor, while I was learning stocks. I would teach kids and stuff, but I took also before the tutoring job. The tutoring job was great, but for I would say like 6 months, I was driving Uber. I was driving Uber while and my finances were pretty stable. And I would tell myself, okay, I'm gonna if I lose $100 a day, $100, I'm gonna drive for $100. And like very rarely it was $100. A lot of times it was $200, $300. I would lose. I was like, oh my God. And that's a big deal, because like to drive for $100 in Uber at that time was like it took a whole day, like 8 hours. So if I lost 200, I mean that means 16 hours. So it's like so when I lost a small amount of money, I would be so like, oh my God, why did I do that? Why did I behave that way? And in hindsight now, that's not a lot of money for me at all. Like, but like at that time, it was so like I used to question myself, man, why am I behaving like this? Why am I doing that? Like, why? Because I would be like so bearish on the stock. You know, like it's gonna, this is a pump and dump. I had confirmation it was a paid pump and dump. They had sent email and text message alerts saying that they were compensated, and but I told myself I have the 100, and I always says that's one thing. Like you question yourself a lot, and you have setbacks all the time. But then like I told myself, like what's crazy is all that student loan debt, I didn't know any other thing that would like in the long run, if I do it right, that will get me out of it. I didn't know. I knew real estate wasn't going to work because I wasn't passionate at all. Stocks, it was something I had energy for, you know. I had energy to study it. But then when you get the setbacks, you sleep longer. You know, you don't want to study. It takes 3 days to do like 5 hours of studying instead of just like 5 hours of studying. You just get so mentally exhausted. So, but like I didn't know any other avenue that was gonna work. I knew architecture was not gonna work. Tutoring was not gonna work. In fact, the tutoring job, they offered me a stake in the franchise, like equity in the franchise, and a full-time position. But I turned it down because I knew like I was still be in the same position as I was as an architect. So it's like, so the only thing that got me, so basically that debt gave me no choice but to keep pushing, keep fighting, because like to survive, like digging myself. I knew like that's the only way to dig myself out of the mess I was in, to really get this figure this out long term. And I had time. I told myself I was gonna give myself until 40 years old, and at 40 years old, I'm 40 years old now. 40 years old, I was gonna reassess. If I was not profitable by 40, I was gonna reassess, and that was 2016. So 8 years ago. So like, but like I think it takes that drive, that mentality of like you're not gonna give up, and even though you have the setbacks and it hurts and it's mentally exhausting, like you can't give up. So like I think that's what it was. But like that was difficult. You know, the early setbacks hurt the most. Like like I've never said that actually out loud. I mean, I've thought about it a lot. It hasn't occurred to me to say it. But yeah, 100. When I tell myself I have $100 stop loss, and it becomes 200, now $200 is nothing to me, nothing at all. But like 200 back then would devastate me. I was hurt. I was like in so much pain. I remember this, man. And I was like, damn, I'm gonna have to drive Uber I'm a slave now. I'm gonna have to drive. I have to sleep in the car. I have to like take a nap in the car and keep driving. That's dangerous actually to do that. So but like that, yeah. So that's the early setbacks. It's tough, but like you just gotta have that mentality of like you can't stop, you can't quit. And over the years, I've seen so many people give up. Um, Good traders too. Like they had a good attitude, they had a good skill set, but like those losses just hurt so much. And then they had a plan B. They had like I know actually a realtor. He made like over 6 figures trading, and then he had a couple of big losses, like a $40,000 loss, 30, then a few of those, and he just got like the wind kicked out of him, and he's like, I'm just gonna go back to real estate. Real estate, I can make 200 grand a year. It's cool, but like the potential with trading, the growth is so much more. The way I see it is potential, and it's I just love it. So, but I see a lot of people like that example I just gave. They just they can't, they just get exhausted. They get mentally like it just hurts. It sucks, but like for traders got to be strong in that way. And I think that's why like a lot of personal growth is involved with trading. Like to get good at, you got to get with personal growth. You got to deal with setbacks. You got to be a good loser. You got to like, have a right mindset and just keep pushing, see the long-term vision for yourself. So, yeah.
We are just few minutes into the podcast, and we are hearing some of the rare truth that people talk about. And a lot of people, like you said, a lot of people are in that situation where $100 and $200 is a lot for them. And for most of the people, they just quit after a couple of losses and after a couple of challenges. I really liked when you said, he had a plan B. And if you have a plan B and you want to make millions money in trading, probably this is not for you, right? You got to have that kind of, the passion, the love for not just the money, but the journey itself. Like you said, having a long-term vision on this is what I'm going to do, and having a kind of set age, okay, at the age of 40, right? If I don't make money, then I'm going to think about the other thing. But until then, I'm going to give my everything in this game, right? That is really important. And I believe, I hope whoever is watching this show, I hope they take this thing and probably just implement it with your life. There is no plan B. You just, stick with it. Yes, there will be losses, there will be challenges, there will be setbacks, but you learn from it and then you just keep continue for it. That is really inspiring, David. Thank you. Talking about the significant breakthrough, right? Was there any specific moment or a trade where you felt, a significant breakthrough? Like, what strategies or adjustment did you make to kind of lead to this turning point?
Okay, so I mean, there's a lot of those. So, but the early losses really shape you, So how you come back from that, because like, in the beginning, the first couple of years, you're still questioning yourself a lot. Like, did I get lucky? Did I not get lucky? Is this for me? Like, why is this like even a real thing? So it's like you're just questioning everything. So I remember in 2020, I had made like I turned a $5,000 account to 16,000 in like a year. This is like all of 2019, and then in 2021, trade set me back that whole year 11,000. My stop loss at that time was 11,000. So like my whole year's gains, and it was an anomaly. It was a gap up. So the stock, so like it was beyond I forgot what my stop loss was at the time, but like it was an OTC stock that I swung because I was under the pattern day trade rule. So the PDT rule, if you have less than $25,000, you can only do 3 trades in 5 days. So I had no more trades left, and I swung it over the weekend. It was a Friday, and it was an OTC stock. I don't even trade OTCs anymore, but like at the time I was. And the OTC stock doesn't trade pre-market or after hours. So it gapped up over the weekend, and it opened up, and immediately I took the loss. It was 11. Well, I let it go a little bit more. It was like 9,000, and then it's at 11,000. I was like, I tapped out. I was done because so I gave back my year gains. But I reflected there, and I was like, you know what? So nothing has changed. Still, my lifestyle has not changed. Nothing has changed. I have a lot of lessons, and even though it hurts so much, you give back a year's gains. You feel it like in your bones, and like, you feel it. But at the same time, like I had and like the reflection that you have is not an easy reflection. It's like like I stopped trading for like a month after that loss. I was like figuring things out, what I was gonna do after that. But it's like every day, like every half an hour or so, the thoughts will come in my head like, my life is still not changed. Nothing is lost. I'm still alive. I'm still healthy. So like I had that good mindset. I was like, I wasn't beating myself up. I was more like just more driven than ever. I was like, it's like it was like I know what happened. I know what happened. It was an OTC stock. I shouldn't have traded OTC stock because like it doesn't trade pre-market or after hours, and it was a COVID pandemic environment, a lot of uncertainty. And I was like, I was in the trade because of pattern day trade rule. I have at that time I had like over 10,000 hours of study time, and I was like, why am I trading under PDT? This is ridiculous. I live in the United States. Like, there's a way to get over PDT money, one way or another. Friends, family, take out money or whatever. I was like, I took out loans. I know you're not supposed to take out loans for trading. That's ridiculous. But like in my situation, I was like, I dedicated a lot of time to study from 2016 to 2019. I dedicated 10,000 hours to this. I'm getting, at the time, I forgot how old I was. What, 4 years ago? So I was 36. I'm like, I'm in my late 30s. The market is volatile. This is like an environment that comes around every 5 to 10 years. And I was like, okay, so the time is now. I need to find a way. So I gathered funds together. Some was borrowed money. But I was like, it's not like I was just trading 3 months and now I'm taking out like money. I'm lending, So I thought about, and then I thought about like that loss it was a wake up call. And I was like, because like the truth was it's just so hard. Like the way I was trading was like, it was going to take forever for me to get over PDT, over the pattern day trade. So like I did a lot of deep reflection for that whole month. Every day, like every half hour, it would pop in my head, and I would just remind. I was like, I got to do something about this. And like I was still getting screen time. I was still, so so I forgot where I was going with the question, but
It was like, so when you had that loss, right? What was the turning point on
turning point.
like taking
So
that loss to the profit?
so it's just that I wasn't gonna quit, and at that point it was like a few times I know I'm not gonna quit, but that one was a year long's worth of gains I gave back. But like I didn't take the gains out and like pay. I wasn't depending on that money anyway, so it was just a wake up call. So that was a big turning point. I mean, there's just several turning points. Another turning point was like when I went to Colombia to expose a scam and came back from that successful. I remember I was talking to someone about this the other day. Like coming back from that was like my first major success. Another turning point, like when I interviewed Jack Schwager on my podcast, the Market Wizards author, that was a huge turning point. So you have a culmination of these like things that just increase your confidence in what you're doing. And then it's like, and then I remember going to like, I know it's like not even that big of a deal, but me going to the New York Stock Exchange, to the NASDAQ exchange, and being able to travel. And it's like surreal because I didn't think I was going to be able to ever travel. Like when I was doing architecture, I was like, man, I remember going in when I graduated my master's, I was like, thank God I traveled abroad when I was an undergrad for a few months, and I got to see some things, because I don't think I'm going to be able to do that ever again. I gotta there's no like I gotta focus on my career, so there's no, so I don't, and I'm in so much debt. I don't think it's not anytime soon. And then with trading, I'm able to go travel, and during COVID, especially, that was a big one. And it just like the freedom and I felt successful like at that time, so that's a big turning point, because you have that confidence. It's like, okay, this is real. I'm doing the right thing, because a lot of people disagree with the way you're doing things outside of trading, especially your family, your friends. They doubt you. They think you got lucky. They think, oh, everybody's like, oh, I'm a trader. You tell someone you're a trader, you sound ridiculous. They're like, I'm a trader too, and they have like a Robinhood app. It's like, it's not the same. I'm devoting my life to this. You have a Robinhood app. So it's like, you know, so you keep it to yourself. And then like when it starts to, when you build up that, all the success that piles up, all these little milestones, and then it just gives you that confidence. And eventually, like I went to the restaurant the other day and someone came up to me and they said, "Oh, I saw you on a podcast, isn't that?" And it's like, he's like, "Oh, I'm a trader too." And then they like, when I say I'm a trader now, like I say, like I'm a pro trader, like, yeah, like, I'm a pro. It's like, but I remember saying I'm a trader in the past and I sound like a mouse, like I'm so insecure, and like that insecurity reflects on your trading too. So it's like, it's hard to stay because traders, we got to be 1,000% focused on what we're doing and what we're trading. I'm a discretionary trader as well, so I need my laser focus. And so in the past, when I had those insecurities, I could stay focused for spurts at a time, but like the whole day, and harness my focus to the maximum, so I can perform at the highest level I can. That was very difficult, and you'll have spurts, and that's why a lot of traders, intermediate traders, or they're starting to get profitable and turn a curve. They have a lot of like moments where they glitch. There's like a glitch in your behavior, and you make a mistake. It's like, why did I add so much? Why did I do that behavior? Why did this get out of hand? Why did that catch me off guard? It's like, so it's like, those insecurities come out. So it's like, the more, but so it's just that, I think it also comes with the more experience, more success, more, so yeah. So all those milestones, for those personal milestones, were like turning points, and his growth, so
So far, what I've learned about this, the challenges, the experiences, and then the turning point is you self-reflect a lot. A lot of people don't. When they make money, like you said, that they think they made it. When they lose money, they think it's the market that is playing against them. And there is not a lot of true self-reflection on what went right, what went wrong, why did I do this, why did I do that, and those kind of questions needs to be asked a lot. And it is better if you do it on every trade, whether you make money or lose money. But that self-reflection is really important in kind of looking back and seeing what has worked to you and what hasn't worked, and that way you can filter things out. You can kind of have some kind of hope, right? Okay, I made this mistake, right? And I mean, from me, like I've lost $117,000, which I turned from $2,300, right? And when I look back, it is like a reflection. Look at I did this mistakes. That is the reason I kind of lost it all to the market. And if I don't, and if I just like, think about the loss that I encountered, I'm like, that is where I'm gonna kind of quit. And it's like, I would say this is not for me. But having that reflection is really important. And I really like the amount of questions and the quality of questions you're asking yourself, in terms of the strategy, in terms of the mistakes, in terms of why something worked out, why something didn't, right? That is really good self-reflection. And yeah, like you said, it is not just one thing that kind of turns everything around. There is no holy grail, right? So there are multiple actions that happens in life that kind of accumulates together, and that becomes the turning point. That is true. Coming on to the psychology, right? You have emphasized the importance of psychology in trading. Can you share a particular instance where some maintaining some psychological resilience was crucial to your success? And in staying in the same topic, what mindset do you stay in before, during, and after the trade?
So very good. So a lot of it is from journaling. One thing is to journal, which you must do. All traders must do, journal their analysis of the technicals and the price action and their observations and their thesis about the stock and how the stock did it play out according to thesis. But then it's like with the behaviors that you had of like what led to the sizing, what led to you venturing out of your plan, the self-talk that you give yourself. You can't be negative. It's because everything is a learning. You can't see it as like because I remember looking at someone's journal a beginner trader, and he was talking to himself like, "Wow, like why did I do that? I'm so this, I'm so that," like bad, like negative words, let's say. And like why is something wrong with me, this, and like talking to himself like that. And there was one book that I like a lot. I've read it a few times on my, my first few years. They're called The Playbook by Mike Bellafiore, and it's like the mental side, like how professional traders think. And this is it's like, it's like a professional athlete, and like it's like a basketball player or football player or whatever, a baseball player, how they analyze themselves afterwards so they can improve. They watch the video of themselves, and they make notes and how they can improve. They don't beat themselves up. So it's so a lot of it stems from that. It's like just tweaking little things at a time, and just with that mindset of improving 1% a day, 1% a day. And it just compounds so fast. And the beauty about trading is, I was thinking about this the other day. So 4 years ago, I was completely broke. I had nothing. It was the middle of COVID. I shaved my head bald, and I was sleeping in the office like 20 hours a day, studying stocks, like to the maximum. And then now it's like a transformation. As like I'm a completely different person. I was looking at the photos of myself 4 years ago. I was like, I'm very proud of that version of David. I'm very proud of it. I'm like, wow, that guy is Brazilian. You can see how tired I was. I didn't know how tired I was, but I look now, I was like, wow, I looked like 50 years old in that photo, as I was younger. And but like, it's just I had that positive self-talk, and I knew I was doing the right thing, and I knew that 1% a day for a long time, it's going to completely transform your life. Like, think about 1% a day improvement. Like, when I was doing architecture, it was no 1% a day. It was just sideways. It was just survival. I was just survival, and it's like a debt. I was actually accumulating more debt because the debt has interest. So it's just like fighting the downward spiral constantly. Also, but now the beauty about trading is you can do 1% a day. It's just a compound effect, and that's the beauty of it. So it's just 1% a day, man.
True. And we kind of, 1% of day is, how much is a minute? It's like 30 minutes something. That counts a lot over not just a
Yeah,
month, years, but a couple of years. That is true.
it's exponential.
How,
Yeah.
you have mentioned about putting that 10,000 hours of studying and all those things, right? So for someone who is as passionate as you are, right? If they want to start, where do you think they should start? Reading a book or following a video? Or like, when you started out, the scenario had changed. The material that is available in the market, it has changed. What do you study? Do you study the pattern? Do you study books? Do you study traders like Mark Minervini, right? What do you mean when you say you're studying the market itself?
So this was 2015, 2016. So like it was barely anything out there. I remember going to the UC. By the way, I was still in graduate school. No, I had just finished graduate school, and I still had access to all the libraries in UCLA. So I went. I was like, you know what? I'm gonna go to the business school, and I'm gonna go to the business library and check out stocks books. And I went to there was no stock books. I was like, man, they had in the library, the Anderson School of Management, UCLA, one of the top business schools. They have like, I don't know, finance courses like crazy. When you go in the library, they have an original booth from the New York Stock Exchange, of the Coca-Cola booth, of the tickers and all that. And I was like, they gotta have stock books. I'm gonna check out all of them. It's nothing to check out. It's like, I went all over the library. I couldn't find anything. They have all types of business books. Nothing about stocks. Nothing about technical analysis. Nothing about anything. Nowhere to start. Now, and the internet was like, they didn't have that much to start with. It was just like I was in the dark to figure it out. It was so hard to go on your own and ask like the newbie question, like, what is a stock? I remember I got an audio book of on Amazon, like of what is a stock, and it didn't it explained it like, if a company has a tractor and they go bankrupt, they got to sell their tractor, and it was trying to explain equity to me. I didn't understand anything of that book. But I listened to it like twice. But anyway, I was in the dark and I was trying to figure it out. And then like going down the YouTube rabbit hole and stuff. And YouTube has changed a lot since then. These days you have so much education, good education online. So like for example, it's good that you mentioned that. So like I started an academy like 2 years ago. I was actually with my partner Sam Dagash. We started an academy. He's based out of Dubai. And he actually came up with the idea and told me, "Hey, David, I'm gonna come up with the mindset version. You come up with the skill set," because he's like a mindset guy and one of the top in his field. But anyway, I was like, you know what? It'd be great if I could teach the version of myself that knew nothing, like how I can make it easier for that guy, that version of David to learn, because I was lost. And because like that 10,000 hours, a lot of it was like me sifting through material, trying to figure it out. And it's just like pure determination to like, it's, to go through it all. And a lot of it was like, fluff material that I didn't need to really like. There was no clear methodology, so it wasn't organized and nothing. It was just like it was like, how do you call it? An autodidact, I think it's called, like when you self-learn. So like I decided to start an academy like that, and then like organize a methodology of like what to study, how you study, and how you journal, because like there's no school for this, there's no college for this. You can't get the information. It's like, and a lot of the education online that you see now, or like the YouTube free material, it's like, the unfortunate part is there's a lot of bad information, and like it's hard if you're new to determine which one's good, which one's bad. For me, I had to go through a lot of bad information too, so it's, and just like I had no one to explain it to me. So it's just like, at the end of the day though, it's all on the person. So it's like the type of person that I was back then is like, I was like a bulldozer. It's like I was determined to figure it out. Like no one was going to stop me. So it's like just being like, having the mentality of like, you're not giving up, you're unstoppable, So it's like, I have the painting right here across, you can't see it, of Hernan Cortez burning the boats. We talked about no plan B. You can't stop a guy like that. Like Hernan Cortez is a conquistador from Spain. He burned the boats of his army. His army wanted to retreat when they landed in Mexico, because they were going to conquer Mexico. I mean, so the army complained. They're like, we're gonna die here, or whatever. Is like, these Indians, the Aztecs, they're gonna kill us. And then so they were scared. And Hernan Cortez at night, he burned the boats, and they were stuck there. They had no choice but to fight, and they succeeded. And that's why, the conquistadors took over. So like, that's just a war strategy over a timeless war strategy of burning the boats, where you have no choice but to fight. Yeah, it's like the 300, the Spartans, they were cornered in the that's another version of it. They were cornered. They had no choice but to fight. Like 300 Spartans, they fought like, I don't know, 100,000 Persians or something. They eventually lost. But like, when you backed up and you have no choice but to fight, it's either get rich or die trying. It's like, we've heard that before. So it's like, you're not going to stop a guy like that. So it takes a combination of like the education and this, but like nothing. This is all a performance-based sport. It's like nothing is guaranteed. It's all on the person. So you can give the person the perfect education, the perfect methodology, but this is not a career field where it's safe, like a 9 to 5, like you get your degree and you go. This is not that. So this is a performance-based thing. It takes a certain type of individual to like really, really make it happen. So it's the drive and the determination, resilience, persistence. So it's like the education, yeah, but yeah, you need all these other qualities too.
It is true. Talking about the burning the boat, I can relate a lot of things that you're saying, because I'm super passionate, right? I've put thousands of hours studying the market. I've lost more than I've ever met, right? But the things, it hasn't stopped me, like you said. Having that passion and burning the boat. right? I remember when, unrelated to the trading, right? I was in a public speaking class. It was a kind of, optional class that I had to take. I mean, it was my decision whether to take it or not. But if when I put myself into that situation where I cannot back down, right? I register for the class, I put myself in front of everyone. Now there is no backing down. Now you have to talk. You have to face your fear. You have to face everything that is in front of you, and you have to just do it. Yes, it is going to be bad in the first couple of tries, but it is going to be better. And that is important. Like, from the beginning till now, we have seen not having a backup plan is actually tells you, like, you are super passionate about this game. And I hate when people say, they tried a couple of times, they see the trading as, the part-time job, and they lost money, and like, this is not for them, it's like a gamble and all those things. Like, come on, where's the hours, the effort you're putting in? Where's the study that you're doing? You are competing against people like you, right? Who has put the full-time hour in it, who has put everything they've got, and they don't look back saying, this is my second option. There is a second option. You're competing against them. You gotta bring your A game, right? That is true. Talking about the risk management side of it, right? You did say when you started out, it was the stop loss. You said the stop loss, this is going to be $100, but it turned out to be 200. And that is, I think, a FOMO and probably a false hope that market is going to rebound, or a hope that you are wrong. What do you say about the risk management? It is super, super important yet underrated. A lot of people just say, I want to go all in. I want to make money. Either I make money or lose money. That's not how you do it. You got to protect your capital, right? How do you minimize the losses? And, depending on the people, definitely. How can you kind of, avoid unacceptable losses?
Okay, so a couple things there. So when I first started though, this was a blessing in disguise. So by me having a $2,000 account, that's the max I could lose. And like the worst situation I could be is, let's say I lose $2,000 and I just got to drive a lot of Uber. You know, the problem is, like, when people start, and I know, and I see this a lot these, like, now, since I over the years, when people start with the over PDT account right away, they load their account up with the money they saved for 30 for the past 5 years, 10 years. They saved $30,000 to 50, let's say 30,000 to 50,000, maybe more, and they're like, oh, this is money for me to figure out some side income, for me to invest. I can afford to lose it because, like, it's not going to affect my lifestyle. So this is like this confusion. And then that, when reality hits and they start to take some losses, they realize, oh, this money actually took me like a long time to earn. And this is like, it's getting wiped out so fast. And then that hurts. And then they disappear. You don't see them trading again. Now, the blessing in disguise was that I had such little amount to even start with. So the first thing I would say, the first risk management is not is trading with such a small amount of money your first few years. That is your risk management. Even if you have bad risk, it's only a small amount of money. So it's like, so while you're figuring it out. So that's number one. I don't think anybody should be trading with money until you have the 10,000 hours, tell you the truth. But these days I have a broker stop loss. The brokers I use, I message them or I call them up, say, hey, put this stop loss in there, and it's out of my hands. It just makes it simple. And also for risk management, like, my journaling over the years have been so meticulous. Journaling, tracking, self-talk, self-reflection, learning from each loss. I meticulously go through everything. I have, like, over the years, just all those good habits and all the tools that you use to figure things out. You start to correlate certain things. And I have, like, I know, like, for example, I spoke with the journalist last year, and she broke I for a week straight. And I told her my rules, and it was really frustrating to talk because they were like, this is too much information. So she broke it down, I think, into 9 steps. And I think I added like one or two more since then. So I have like an 11-step process I meticulously go through before every trade. And that is part of like my risk management. And this is what, for short selling, knowing what not to trade. Like, for example, this week we had a lot of nano floats, under 1 million float stocks. I don't touch those. They're erratic. It's all about supply and demand. Those have low supply, smaller demand can push it up really nasty. Another one, high debt stocks. They move erratic. These are overly shorted stocks. Big funds target them. They use a lot of leverage, and when they squeeze, they squeeze. I avoid them. Chinese stocks. I don't trade Chinese stocks. I don't even have to mention it. I don't talk about that publicly anymore. But like certain high institutional stocks, ownerships, I don't touch them. Certain news, like if a real company like Nvidia invests in some company, and some small cap company, it starts to go up, I don't touch it. So part of my risk management is not only the broker stop loss, but having this meticulous process. The way I see it is just it's like a fighter pilot, the checklist of a fighter pilot. You have this incredibly expensive war machine, this aircraft that goes like, sonic speed or whatever it is. And it's like, it costs so much money, $1 billion to operate it. And it's like, you have to be meticulous. And if you see like fighter pilots, they go into a classroom before they go on the plane and they rehearse the flight and the formation and what they're going to do. And everything is like so seamless, so flawless. And that's the way trading is for me. And that's the way I approach it. And when I'm sitting here in front of this computer, that's how I see it. I'm like a pilot. And like even airplanes, like when we go on airplanes, nobody is scared to go on an airplane. And this is a tube that the reality is we're sitting in a tube 10,000 feet up or whatever, 5,000, 10,000 feet up in the sky. And nobody's scared because like it's been figured out. It's been the checklist, the pre-flight checklist is immaculate. The engineering's immaculate. It's been figured out. And I think trading, you need to figure out trading so it can be like that. So when I walk into my little office over here, I walk in the door, everything is figured out. I have my checklist, I have my routines. It's like boom, 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 and it's like it's good to go. So that's part. And then you have your safety nets in place, which are the broker stop loss, which is a dollar amount for me, a certain dollar amount. I don't want, it's like, I've said it in the past in other podcasts, but like people get confused. It's like, oh, David, I'll say it now. It's like, David has a $10,000 stop loss. So just have a 10,000, like that's 10,000 for me now. It was $100 for me in 2016. So everything it has to be relative. You have to figure that out. And that's the rocky, like part of trading is like when people, that's the part, like, I don't like it. I don't encourage traders beginner traders or traders that are figuring it out in their journey to look at other traders, how much they made or how much they lost, because it throws everybody off, because like how much did that trader start with? Did they start with a $1 million account? Were they a little bit were they financially educated? I know I was financially illiterate, so I had to start from scratch with no money. So it's like when you see someone win, have a $100,000 win, it's like, okay, how much did they risk? How much, like, it's just, it's everything is for like, so like you have to know like what you feel comfortable with. And like, for example, if you have a $2,000 account, $2,000 is not your risk. $100 is actually too much. It's like, so it's like you got to really figure it out. And that's the part with trading. It's like, it's up to you. This is like, you are the entrepreneur, and the main objective is to stick around long enough so you can have that experience where it fixes itself over the course of time, because you have the experience and you're progressing, you're improving 1% a day, you're doing all the habits, you're journaling, you're self-reflecting, you're constantly reviewing, rehearsing, and then you make adjustments little by little by little by little, and then it gets figured out. Then it is like that pre-flight checklist of a pilot, and the airplane, nobody's worried about it. There's such a small percentage of it like failing, no one even worries about it, So it's got to be like that. But that's the way I approach risk management, and I think that's also one of the, like, my architecture background helps with that, because architects, for example, I'm like, it's an art and a science, and it's like for example, I'm in a skyscraper right now. I just took the elevator up before the podcast. It's like the elevator goes so fast. The floor, there's earthquakes. I don't even feel them. I'm in California, and nobody worries about it because it's been figured out. We figured out the structure, the physics, the math, and it's like we feel comfortable. And like trading has to be like that. You figure it out. You engineer it in a way where it's figured out, and it runs itself. It's comfortable. Your process, it's just automatic.
Awesome, yes, man. And sometimes it comes as a once you have enough practice and once you are in the game for long enough, it comes as a second habit too. And that is exactly what we're trying to do, is trying to kind of help people who want to really improve in this game to kind of learn from people like you, right? Who has gone through countless hours of trading and kind of get inspired from it. That is true. Talking about the lessons, right? Trading involves both wins and losses. You have experienced countless of them, right? What is one of the most important, lessons you have learned from the trading loss as well as the gains that you have gained?
The trading loss, well, one of the most important ones was the stop loss. So having some kind of stop in place so that you can survive, and it's like to be able to come back the next day and trade like normal, because like you don't want to have a setback where you question yourself. One second. You question yourself, and now your confidence takes a hit, and it takes you a month to come back, or like you're just scared to trade. You don't want to get yourself in that. You want to be able to trade normal, clear-minded, and just come back on the horse. So it's like having that stop loss after having a big setback. So in 2023, last year, actually, I had a huge setback, and that's why I put the stop loss in. And ever since then, yeah, like trading has improved. It's just sometimes we human beings, we got to learn the hard way. I heard about that, having that broker stop loss in. I heard, I listen to podcasts myself, and I've heard professional traders mention it, and I was like, I can do it myself. And it's like, if the pros do it, you should do it too. So, so learning the hard way, but yeah, that I would say the broker stop loss was a main one. And just being able to trade normally, like a day or two after, like having that awareness of like you want to preserve, your mindset, your mental fortitude. So it's like you can never have a setback that takes you, like for me, it's like 2 or 3 days maximum. So like if not, I did something really wrong, and I need to make an adjustment, a big adjustment.
Even in our community, we push a lot of people and traders about the stop loss. A lot of traders that I've met and talked to, they, like you said, they learn it from their experience. They learn it from big mistakes they have made. And we call that, the stop loss is the worst thing that can ever happen to your portfolio. Below the stop loss, that is your base, right? That is whether it is $200 stop loss or a $10,000 stop loss. That is the worst thing that can happen in your trade. That is, and it is really important. And I think even though people make money, people have made hundreds and thousands, whether they get lucky or they make it out on their own. In the long run, they lose out because of the stop loss. Like there is no safety net, right? If the market goes down, there is, I've been in a couple of trades where it went down a couple of like $100, right? I'm like, okay, it's gonna go back up. I was below my, the market, the loss was below my comfort zone, and I was in a hope that it is going to go back up, and then I saw next day it is going down. I could have gotten out of that trade immediately, but no, that was a hope, the false hope, right? And then again, the next day it went down, and all of a sudden, like, I started, getting liquidated out and all those things. That is why, like you said earlier, you are going to make money if you stay the longest time. That's how money is made. Because in that time, you are going to make, countless mistakes. You are going to learn from it, right? But you have to make sure that you are in this game for as long as you can be. That is true. And a lot of best traders, David, they say you have to kind of create your own plan and then talk about the strategy, and you have to stick with that plan, right? For someone who is a beginner, when I started out too, I did not know what the plan they were talking about, the strategy. I'm like, those are the big words, right? Um, for anyone who is starting out or who has been in the market, but they don't know what the plan looks like, what the strategy looks like, what do you tell them about creating their own? Like you said, you created the checklist, right? How should someone start creating those valuable kind of tools for themselves?
Well, you gotta journal. So like I think a lot of traders fail to journal every single trade. I journaled uh early on, like I mentioned before. I read the playbook by Mike Bellafiore, and there it goes through journaling practices. Now, when I read that book, it was a it was cool because I was journaling like that already, and I read it and it reaffirmed, and then I doubled down on it. I was like, okay, so I need to like I'm journaling correctly, but now I need to journal more like this. So instead of journaling once every 2 days or once I would journal every day, and I would journal my green trades, I'll journal my red trades, I'll journal everything, an assessment of my day at the end, and just journal. And then especially the losses, I would journal even more. I remember I was writing sometimes 1,000 words for a loss, and like just deep reflection and going down the rabbit hole of like, where is that behavior coming from? Like, why am I doing this? And then not only that, the issues I was having psychologically or mentally, coming up with rules. Like when you have a few losses, and the the common denominator of those losses is, for example, for me it was the float size, under 2 million float at one point, or under 1 million float. So it's like, okay, so these are problematic for me. I don't trade these well. Um, or like, for example, early on, I noticed a pattern on Fridays. I don't trade Fridays well. And then analyzing that, why don't I trade Fridays well? Okay, so Fridays is a higher chance for a short squeeze. So short sellers don't want to hold over the weekend. A lot, and there's like a buildup of shorts from the week, and there's issues with the brokers and clearing firms, and they get out the shorts on Friday. A lot of problems. So then, until I figured it out, I laid off on Fridays because I was like, I'm making decent money. I was becoming profitable, and then I'll give back a whole week or a few days on Friday. It was not good, especially at that point in my life. I was trying to change my life. I was completely broke and poor, so it's like I cannot afford to give back the beautiful gains that I made during the week and give it back on the last day of the week. So it's like I might as well just take the day off until I figure it out. Or just like I would just watch the charts. I'll just watch the morning. I was like, I'm not trading. I'm just gonna get this screen time education and see how I can fix this problem. So it's like constantly trying to figure it out. Then coming up with rules for yourself, and then educating yourself. There's a lot of material out there, and finding a mentor that's someone that you're similar to, or you're like you want to, you like the person, you like what they have to, it clicks, and then you correct things, and you come up with rules, and you just become strict, and you constantly improve outside of trading too. Your habits outside of trading, that was big for me too. I quit drinking early on. I was partying and stuff. In 2019 was like the last one I went to, and then and just like creating good habits at the gym, with food, with relationships with people, cutting out people that are not serving you, and like attracting people that are good for you, for your life, and for your growth, and where you want to go in the future. And so it's like all these things are compounding, and like it all comes down to, I think the best practice is the journaling, because with journaling you self-reflect, and like nobody sees the journal but you, and like you may never even come back to that journal topic, but you got your thoughts out and you wrote it down, and it's like getting engraved, ingrained in you, and it becomes like, if you do it enough times, it just becomes part of you, like those behaviors, are good behaviors. It becomes part of you. Then that's why we go to it. It just becomes second nature after a while. Those rules that you make for yourself, like the rules I have for my trading, they're like part of my identity. And if it's part of your identity, it's so much easier to like follow it, you know? So like, yeah, you know?
So, just to extend on that, when you journal, right, do you use some kind of, tool, software, or it's just like a plain text where you kind of ask a lot of questions? Okay, what I'm thinking about the market right now, where is the market in terms of stages or in terms of trend? This is my checklist, like, sorry, not the checklist, but the watch list, right? And when I'm entering a trade, why did I enter a trade? Do you kind of, when you write those things, do you have a lot of questions and then you kind of try to answer it yourself, or what does the format of that journal looks like to you?
So the first priority with journaling is to get it done. And being consistent with it. You know, so you have to make it easy as possible for yourself. And so you just do it. So that's the goal. But I've been through all the phases. So like early on, I didn't know any software or whatever. I just took a pen and paper and started journaling. And then someone told me about that. That was like my first year. And, you know, like on my architecture sketchbook, that's what I was doing. And I never revisited it again. I just wrote it down and like it was there on my desk for the longest time. But I never, you know, it's like you do it once and then it's like you just create the habit. And then like after my first year, I remember someone told me about Trader View. Actually, Trader View in the book, The Playbook by Mike Bellafiore, it mentions Trader View. So I was like, huh, Trader View. I went online and it was it cost money, but they had a free version that you can upload trades once a week. But like you can only journal once a week, and I wanted to journal every day. So I would combine it. I'll be like, and I was when you're starting out your trading journey, it's good to minimize cost because your focus is like trying to like create less pressure for yourself to perform. So it's like I already invested at that time in education and stuff and books. So I was trying to minimize my costs. So I would journal by writing, and then like once a week I would journal again on the Trader View. So on Saturday when you could upload your trades on a Saturday over the weekend, I would upload my trades and it had charts, it had graphs, and I could see like my entries, my exits, and then I would journal it again. So can you imagine this repetition? And I remember I would study successful entrepreneurs and athletes, and I remember seeing Kobe Bryant a lot. And Kobe Bryant, he would do like his teammates and or like rivals. They would practice like twice a day. He practiced like 4 times a day, and it's that repetition. And then it's like because one thing I noticed that at the end of the week I had different thoughts about the same stocks that I'd had like right after the trade. So it's important to like reflect at the end of the week and then reflect after the trade. So it helped me. And then 2 years later, someone told me about Trader Sync. Trader Sync is just like Trader View, except they have an app on the phone and I could review trades while like I'm on the go. So I was like, I'm going to use that one. So then I switched over all my Trader View. I had to re-upload them all to Trader Sync one by one. And I remember copying and pasting each journal. You don't need to go that far, but I wanted to convert everything. And I spent like a week converting it. But like, you don't have to do all that. But like,
That's the dedication. Wow.
Yeah, because it meant a lot to me to be able to do that. And then now these days, this is after this is I since I have a podcast now, The Friendly Bear. Since like 2 years ago, the way I was like, okay, I got a lot of journaling. The pencil and the pen and the typing has been great, but I'm gonna grow now. I'm gonna do trade reviews with the screen share and archive it on my YouTube channel. So like I upload them daily for the members of the podcast. It's not public. I don't want this. It's a private journal, man. You know, I'm not going to give it to the public. But like for members, I make it accessible to them. And there's not a lot of members. I mean, it's like it's a good amount. Like I don't know, dozens, but it's not like thousands. So it's like it's enough where I feel comfortable. Like I can be myself. I can journal that's beneficial for my own journal, because like a lot of this stuff is not, is, you know, it's like personal. So I get a Zoom, I do a screen share for myself, no one in it, and then I just go over the trade after every day. And then there's some now I do like a stock analysis. So like there's another playlist that I have for myself, and I make it for the members. But like for my, it's all for me. It's all mine. It's just now I'm uploading it to YouTube for like a private channel. Now those stock analysis, I take it not only a trade review, but an individual stock where like I break down the fundamentals, my thesis. It's just like when I was journaling back in the day. Except now, it's honestly I enjoy this process more. It's fun because I get to speak it. I get to wear my headset next to my computer, and like it's fun to do instead of writing it down. So it's just like, and like I do a lot more of them now. So can you imagine the one we talked about 1% a day? Now I'm doing like 2% a day. So, you know, because like I'm having fun with it now. In the past, I was like, I get a loss, a setback. It's like I made $10 on a trade. You know, it's like it's such a struggle. But now it's fun, and it's like it's like playing the piano. It's like I'm going to play. It's like, you know, like Stevie Wonder playing the piano. So like it's like what? So but the main objective is, it goes back to consistency, and like what is going to be the easiest way for you to keep at it. Like we need the traders to journal more, not to journal the minimum amount. You got to journal more. So now I'm having fun with it. Like, so I tell this to beginner traders all the time. It's like, if I'm doing more journaling than you, you know, how do you expect to be good? And I'm good. Like, and I'm doing more journaling than you, you know, so in the beginner should do more journaling than me.
True.
So
you got to step up the game. That's true.
yeah. But I use now videos for Zoom. You could I know traders that do audio only. They review their trades. They want to hear themselves, like, they want to come back to it later and hear themselves. They record themselves during the trade. I used to do this too. So you record yourself during the trade, and you talk to yourself, and then you review it like at the end of the week, and you're like, oh man, I was really nervous in that trade, man. I could hear it in my voice. Why was I nervous? I gotta like that. That was not good. And because with trading, it's like you got to be really aware, because like if you have a green trade, the green trade, you could have gotten away with some bad behaviors there. A bad trade could still reward you with money, and that's not good. And that's something that, or a red trade can actually be a good trade, and a green trade could actually be a bad trade. So it's like that's why it takes extensive journaling, because I know traders, they only journal their red trades, or, you know, and they don't ignore their green trades. But sometimes the green trade was the bad trade. So it's like you got to journal everything. Yeah.
True. That is true. I have two more questions left. One is just a quick overview of how you analyze the market. Do you go from top down to identifying just the trend, and then you enter the trade? Like, how do you kind of think about before you actually like enter the trade?
So the overall market, I'm always glancing at it. I don't really, because I focus on small cap stocks. These are stocks with a 250 million market cap or less. A lot of them are borderline scams, and I like that. I feel comfortable with that because I know the end game. The end game is down. That's why I'm short. But like the overall market, I always keep track. Like, are we in a bullish market? Like, what's the environment like? I know, especially in 2020 and 21, when everybody's walking around with their Robinhood app and the stimulus check in the US, and everyone's like excited they're like, you're a trader, I'm a trader too. This is awesome. Money is easy. I'm going to take out a loan from my bank and buy stocks. This is easy. Everybody needs to do it. Like, why isn't everybody rich? This is ridiculous. Like, this is so easy. So like, I'm aware of that like environment. And that thing is, I've seen it before. So when I see that, I'm aware. Like, I'm also always aware, like, who's on the other side of the trade. Is it retail traders? Is it institutional traders? Is it the crowd? Is it like with GameStop, for example? Did Roaring Kitty say something, and now they have what do you call it, nostalgia from like 2021. They come out of the woodwork. The other day, I'm like I like to be aware of these things too. I walked by like my building security, and the security guard tells the other security guard, "Hey, buy this stock. Look, it's going down." You know, and he's taking a break, going in the corner and buying a stock. I like to see this because like sometimes with these small companies, it's people like it's not professionals buying the stock. It's like people like just regular
True.
people trying to like they're trying to make some money real fast. So it's like knowing who's in the other side of the trade, the overall market, knowing like what the big caps are doing. Like for example, Nvidia is like in the AI sector, so now and it was going crazy earlier in the year. It still kind of is, I think. And it's like, okay, so what is hot right now? Artificial intelligence, or like electric cars, or is it marijuana, is it crypto? Because for me as a short seller, I want to know like what to avoid. I like the easier money. I don't like to fight the crowd. So that's one thing I learned early on. Like I don't want to fight the crowd. So yeah, being aware of the market overall, just having it an idea of the world, you know.
That is true. So for the final question, this is a little different for you. I don't know if I should ask or not, right? I mean, you're known for sorting the market. What do you think it takes to be the ultimate bull?
The ultimate bull. Well, the ultimate bull. That's a very good question, and that's the name of the podcast. So the ultimate bull, I imagine, because I imagine myself longing in the future. I actually made my first long in 2 years, like last week, and it was a stock I would not short because my rules told me not to short it. So you take my rules, that 11 steps I told you about, the 9, now it's 11. It was 9, and if I don't short it, you should probably long it. So like the ultimate bull will take my rules and apply them on the like what I don't short, you should long it. So if all 11 align, it's the ultimate bull stock.
That requires a lot of conviction. For someone who
Yeah.
might be interested, where can they find those 11 steps?
Okay, so Business Insider did an article last year. It's I guess if you just Google me, you'll see they've done a lot of articles on me. The journalist loves me; she hits me up all the time because short sellers don't like to talk, but I like to talk. So I'm one of the rare short sellers that likes to talk. They're all like scared and they're hiding. They're like because people think they're evil and
Yeah.
because they blame them for the stocks going down. But I'm one of the few that talk. So I think Business I did like 6, but there's one specific one. Oh, the title says like 9 indicators this short seller uses, and it says it right there. And actually, I have the article on my academy. So conscious-trading-academy.com. There's a press section. You can click it. But yeah, it's there. It's the 9 steps, and it's very. So these journalists, they're so concise and they go straight to the point. This like they're able to take what took me like many hours to say, and they're just like going straight to the point. It's beautifully written.
That is really interesting. I was unsure that I would hear that thing, but the reason we are asking this is we believe Ultimate Bull is the one who makes money regardless of the market, whether you are in the bull market or the bear market. But like you said, if something does not satisfy my criteria, you got it.